Welcome to episode 21 of the Danso Pitch. It's been a long stay. Damn. I did my taxes.
Yeah, I actually paid mine today too, man.
My girl has been nice to me for the past 2 months, so everything is feeling good today. Honestly, I'm ready to pod, guys.
That's perfect, man.
Yeah.
I'm ready too.
Yeah, I wanna first give a shout out to those tuning in from Spotify, Apple Podcasts, as well as YouTube. Thank you guys for tuning in. Ramy, how was your 4th of July weekend and how you been?
Well, I wasn't really. I did have a few gatherings, but it wasn't, to celebrate the 4th of July. As
hope not.
As we had our Juneteenth episode last, so
Yeah.
But no, it was a great weekend. Nice long Friday off, and got to see some people that I haven't seen in a long time. So I'm feeling good, man. I'm riding high, and that week off of recording last week really did me justice. Now I'm angsty, ready to go today.
All right, perfect. Yeah, so for everybody that's listening and viewing, we have a special episode for you today. A lot of people have been asking us for the past couple months in terms of how they can go about, finding an apartment, finding a house, what rates they can look for. Now, we kept saying that we're not the professionals. So what do? We went and got the professional for you guys.
I appreciate it, man.
Yeah, of course. So please, for the guests that's tuned in, please introduce yourself, and we'll go from there. So please introduce yourself. Give us a little bit of a background.
All right. My name is Ede.
Okay.
I've been doing real estate for about 4 years. After college, graduated in 2016. I had a corporate job downtown in Manhattan. It was cool. It was all right. But after reading a lot of books, the common theme from most people who were doing well in life was real estate.
Mm-hmm.
So I figured, why not give it a try? And started, and I was pretty good at it. So I'm still going.
Okay, good.
Yeah.
So do you do real estate as a full-time or part-time?
Full-time. When I first started, it was part-time because I wanted to learn the markets.
Mm-hmm.
Once I learned the market, I switched over to the full-time position. And it's been pretty good, so I can't really complain.
Okay, perfect.
I have a question.
Yeah, Ramy. Mm-hmm.
So you mentioned that you started, in a corporate job and then transitioned after doing research and reading. Does that mean that your first job was not in real estate, right?
Correct. My first job was not in real estate. I was actually a B2B sales consultant. So what I did was I went to various businesses and trying to gain a business and stuff like that, which propelled me into the real estate career because it's all sales for the most part. I was able to work on my customer service, managing accounts, and just my people skills all around, which helped me in my real estate career.
Okay, nice. And how many apartments do you help buyers purchase each year approximately?
So real estate's all about season. So in a low season, I'll say anywhere from 6 to 10 on a monthly.
Wow.
In the summertime, when things are going very well, you could get anywhere from 8 to 12, 15 mark.
Mm-hmm.
Wow. It all depends. Real estate is season, like I said. So in the summertime, it makes sense. A lot of people looking for new apartments, houses, because the weather's nice. Kids are out of school,
mm-hmm.
and all that kind of stuff. In the winter, it slows down a little because not a lot of people want to move when it's cold, but there's still business. You have to put a little bit more work in.
Well,
okay.
Based on that, I have a question then.
Hey, one more thing. I don't know, Charles. You're frozen on my end. I don't know if he's frozen on your guys' end.
Yeah, but I think. Yeah, I guess we'll just truck through it. I don't know.
Okay.
I guess that's fine.
We'll keep it going because his face
no problem.
good. His face looks good moving or frozen. Anyway.
Yeah, exactly.
But I had a question. So you mentioned that it's seasonal for home buying. So the summer is kind of like the hottest months. I mean,
correct.
No pun intended. But the hottest months for home buying. Is there a particular reason for that? And would you, for somebody that is looking for a home, would you encourage them to go buy during the hottest months or during the low months? Like, is it better to go in when everybody's going in or better when it's more calm?
That's tricky because in terms of home buying, I feel like a lot of people do it. Like, if you're a family, you do it during the summer because, number one, kids are out of school. So you're not really interrupting their schedule. The weather is better to move. It's not cold and all that kind of stuff. In terms of rental, the reason why, all right, so let me just tell you. So in the rental market, I was doing in Manhattan. And the reason why in Manhattan, it's lucrative in the summers because a lot of people get new jobs, relocation, and all that kind of stuff. So people graduating from college, they get in jobs into the city. So that's when it's the hottest for the most part. So in terms of home buying, it's just that's when parents feel it's better. The children out of school. There's no real reason as to why it's the hottest. It's just that's the way the market seems to be every year. What I would say, there is less inventory in the summertime on the rental side. You know, because of that, because of like a lot of traffic, people moving in and out. Now in the wintertime, you get a lot more inventory, but not a lot of clients. So it's like a give and take, you know. You just got to figure out what works for you.
Okay.
Did I answer your question or?
Yes, you totally did. Yeah.
Okay.
Okay, perfect. So basically, sorry guys, I know that my video is a little bit distraught, but I'll continue. So
You're back. You're back
yeah.
now.
All right, perfect. Yeah, I see you guys perfectly now. Thank you. So basically, in terms of I guess for the home buyer or somebody looking to get an apartment, what are certain red flags that person can look for when they're looking to get like an apartment or home, like something that kind of stands out that you can kind of give advice to be like, you know, maybe this isn't something you should keep a lookout for when you're apartment searching.
So like I'm gonna talk about two different markets. So in Manhattan, I always tell my clients, in terms of renting, you always want to look for a doorman building. And the reason being, you have security, your packages are always accounted for, and then a general maintenance. Usually what you see in non-doorman buildings in Manhattan is that just if there's not an on-site super, there's nobody maintaining the building, so you get the rodent issues and all that kind of stuff. But when you have a doorman and you have a management company and all those people looking after the building, the general upkeep is better, so those issues aren't there like that. So I mean, of course, the doorman buildings are at a higher price point, but you're paying for that comfort, you know.
Okay. Now
in terms of now, like in sales, Manhattan is cool for sales too, but just I've been doing sales in Queens, Long Island, and Brooklyn, not focusing on Manhattan like that. So in terms of Queens, things to look out for when buying a home, that's the inspector's job.
Oh, okay.
Like he comes in, does the inspection report, and it tells you what's wrong with the house, et cetera, and then you can use that as a negotiation tool on the price of the general price of the home, or you can have the homeowner repair those issues before you even move in. You know, so the two main things I tell my clients when taking them out to look for homes is foundational and water damage, because those are the two things that cost a lot, and roof for the most part. Everything else, like the nooks and cracks, like a staircase squeaking or a little hole in the roof, that's something that can be plastered. You know, it's not too problematic. But foundation, water damage, and roof, boilers, those four, I would say look out for.
Okay.
And everything else, but for the most part, if you have a good inspector, he'll be able to inspect the house and let you know what's wrong with it before you even get into contract.
Okay.
That's very helpful. The three main things to look out for. So you should always have an inspector ready to go, like at some point before you purchase the home.
Correct. And if you have a good agent, he will have an inspector to recommend for you.
Okay.
Yeah.
Ron, you got something?
That was my main question. Let's see. How long would you say is the process of, you know, somebody first reaches out to you, you know, I'm interested in buying a home in Long Island, but I'm not really sure where. What's the general entire process like? Could it vary from a very long time to a very short time, or is it usually standard?
So standard, you're saying here from a month, 3 months, but it varies from time to time, because first off, you want to have a pre-approval. What a pre-approval does, it gives you like a rough figure of how much the bank will loan you. So you don't want to go out and look for homes. You start looking at a house for $1 million when the bank would generally only give you $500, or you're looking at a home for $500, but the bank will give you $8, so you can look at homes for $8. You know, so you always want to get a pre-approval letter to gauge how much the bank is going to loan you. That's step number one. After you get that, then the agent will work with you. You tell them your neighborhoods you're looking for. You guys set up some visits. You take a look. Every client is different. Some clients know what they want. As some clients, you have to kind of let them know needs versus wants. Needs versus wants. So like I always tell my clients, what do you need? Because that's what's really going to satisfy you now. Your wants could come later, you know? So every client is different. But if I had to gauge from talking to a client to getting them under contract, I'll say a month. If it's like a client that's very adamant about seeing a lot, I'll say about 3 months. You know, but it's not that it's not the longer process. Now on the rental side, it's a much shorter process. So let's say if I meet a client one day, 2-3 days later, they may be taking an apartment. So the sales cycle is much smaller. You know, I mean much shorter.
Yeah.
Got it. And so you would say for a home buyer, somebody looking to buy a home, talk to your bank or credit union and see what kind of loan you'd be pre-approved for first, so that
Correct.
you know what you could bring to the table.
Correct. That's probably the best bet, because it's like, if you don't have that, then you're kind of just window shopping, because you don't know what you can get. Like, you can be looking at houses for $1 million. Next thing you know, the bank approves you for 700. So you just wasted that whole time looking at $1 million homes when you only can really get approved for 700,000. You know. So that's very important in the sales process.
And what's the ideal, credit score to have when doing this?
Because of Corona, a lot of things have changed. Now, of course, the higher your credit score, the better. Now, I believe minimum credit score with COVID now, I believe they're asking for 680, but that's not the major institutions. The major institutions like Chase, BOA, and Wells Fargo, they're looking at the 720 range, stuff like that. But you can still get a good mortgage by going through a mortgage broker, because what a mortgage broker does is he shops at multiple banks to get you the best rate. Yeah.
Wow. So there's a broker specifically to help you find the best mortgage rates.
Correct.
Oh wow.
Yeah. And they're pretty good, because they get paid when a deal closes, so they're aggressive with it.
Okay. No, I appreciate this. You're giving us the game right now. Even I'm learning shit. I'm like,
I'm asking.
No problem. Anytime. Any questions you guys have about sales and rents, I could pretty much cover. So
I'm honestly asking the things that I would want to know, because if I ever want to buy a home, I almost tossed the playbook out the window, Charles.
No problem, man. No problem at all.
Appreciate that. And in terms of like fees, are there like any extra fees that you initially don't see when you are trying to get a home, an apartment? That could be like from a utilities basis, like anything like gas, anything like that.
So apartments, for the most part, by New York City law, all utilities are included except for electricity and cable/Wi-Fi. So heat, hot water, gas is supposed to be included. Now, if it's not included, it must be stated in your lease for rent.
Okay.
On a rental side.
That's
now on a home, when you buy a home, all utilities on you. Landscaping, roofing, gas, heating, water, that's all on you. Now, so that's why that's the perks versus home buying and renting. Renting, you're not building equity when you're paying your rent on a monthly basis, but you don't have to deal with the headache of maintaining your home and all that kind of stuff. So it has its perks.
Okay.
Is there a benefit to, generally, to my understanding, you want to pay off, your mortgages and your loans as quickly as possible. So, do you recommend like going into it with as much of a down payment as you can off the rip?
So yes, a lot of people think 3.5 because the first time home buyer. That's good if you don't have enough saved to put down. But if you have enough saved, I recommend putting down enough, because then your monthly payments are shorter. The risk of you going to foreclosure is a lot lower. Just most homes that go to foreclosure, if you look at the statistics, are the 3.5% down. I always recommend at least minimum 5. A good way to gauge, in my opinion, is 10.
Okay.
Aim for 10% down if possible.
Aim for 10% down if possible.
Is there a minimum?
There's no. With condos and co-ops, they they have their own stipulations where some ask for minimum 10%, some ask for minimum 20. So condos and co-ops they have their own thing going on. Now, a regular home, the minimum is like 3.5. But it's competitive. Let's say you have 5 people bidding on a home. Someone's wanting to put 20%. You're putting 3.5. Who's the homeowner going to go with? The 20%, because he thinks that he will get approved and close quicker and all that kind of stuff. So it's a game, man. It's a game.
That's a good point. So it's a competitive market, and usually you're out trying to win against somebody else.
Yes.
I have a question now about.
I don't mean to cut you off. I'm sorry to cut you off.
No, go ahead.
On a renting side, it's first come, first serve. So if you put an application in first, you have priority on that unit until you don't get approved. It's not like that on the home buying side. It's different.
Oh,
Yeah.
okay.
That's really good to know. Okay.
Yeah.
My question now is turning to rates on, for example, mortgage rates. There's been, during COVID, there was, a lot of lowering of, lender rates, and I believe that impacts mortgage rates. So how is it right now if people are looking for homes now? Are they able to secure mortgages at lower interest rates than they were a few months back?
100%. Just talking from experience. So my client, he actually is about to close, I believe, in about a week or so. He got an interest rate of 2.85.
Wow.
That's extremely low. That's about anywhere from 50 to 70K savings over a 30-year fixed term mortgage. Now, there's all these studies and reports saying that it's the lowest interest rates ever in American history and stuff like that. And it's true. So a lot of first-time home buyers are taking advantage. With that being said, there's not a lot of it's a seller's market right now. So it's competitive. So yeah, the interest rate is low, but the competition to get homes is at an all-time high.
Because everybody's trying to take advantage of this situation.
In certain markets. Now, Manhattan, they have a lot of things going on. A lot of homes for sale, of course, because it's condensed. And with COVID going right now, everybody wants to be in an area where it's not as condensed. So,
Interesting.
Yeah. Like a lot of things that go on in the world affects the real estate market. It's just how it is. In a financial market, which I'm pretty sure you know about, Charles, and stuff like that. So.
Yeah. No, it's interesting that like you just mentioned that, because that's how I'm thinking about. We actually were just discussing it at my actual job. So like for me to hear that from you is kind of put things in perspective for me. Because I heard like they were saying like interest rates are at an all-time low. But I guess my question is, I've been following a lot of like financial experts, and they always say they recommend getting a 15 as opposed to a 30-year term on a home. But in your opinion, do you think the 15 is a better deal in the long?
It all depends. I'd say 30-year. Keep the payments low, and then just get no acceleration clause or something like that, which states that like if you pay your loan off quicker, it's no like penalty, Mm-hmm. So let's say there's a month where you can't afford, because like 15, of course, the shorter the term of the loan is, the higher the mortgage payment,
Mm-hmm.
Right.
So let's say if there's a month where, let's say if your let me just give you an example. Let's say if your mortgage payment on a 15-year fixed mortgage is $6,000.
Mm-hmm.
Versus on a 30-year mortgage, it'll be $3,000, right?
Mm-hmm.
Now you can pay $6,000 on a 30-year mortgage, if you wanted to, if you have it, and then and then on a month, let's say if something happens, like a coronavirus comes, you can't afford that $6,000, you can still pay that $3,000.
Mm-hmm.
And you get what I'm saying, as opposed to like your payment being $6,000 every month, Like I look at it, I think that's a smarter strategy. That's me personally. Everybody has different ideas and stuff like that, but I figure like, you always want to have a low payment and just, add on to it. It's good. Like same thing with a car note, the lower your payment, the better. It doesn't mean that you have to make that payment. You can double it up to get to finish the loan out quicker,
Correct.
Right. So it's like under promise, over deliver. And,
exactly.
and you're not pressing yourself by, you have as much time as you need, but you can pay off extra. Is there any like penalties? What's the scenario like where somebody can't pay, their mortgage for 1 month? Does that automatically increase their overall spend? You know what I mean? Like, say you can't make your mortgage payment 1 month. What happens in the grand scheme of things?
You'll get a notice, I believe. A notice saying that you didn't pay, and then it'll just, of course, your credit will drop a little bit, but you'll have to pay it. Like, so it'll probably get attached to your second month. All depends on how you talk to the bank. Now, with the mortgage forbearance in place, I believe the banks are actually attaching it to the end of the mortgage. That's what I'm hearing from people that's taking advantage of it at the end of the mortgage, or that they paid up front. So it's different options. Everything is in limbo right now. The banks, when clients talk to the banks tell them call me back in about a month and stuff like that. So there's no real definite answer to that. That kind of stuff. It all depends on like that's like if I call the bank and say, hey, I'm short of my payments. Can you work on a payment plan with me? whatever you and the bank decides, whatever you and the bank decide works for the both of you guys, that's what's gonna happen. So let's say if you amortize over the course of your loan, or you attach to the back of your loan, you get what I'm saying, or you pay it next month. It all depends on what you and the bank.
So you can negotiate and try to play ball with the lenders.
With the lender, most people don't know that, but everything's negotiable in this life.
That's a great point right there, because we have a whole episode on that too, Charles, as you know.
We do.
Right, that's great. That answers my question.
Yeah, I mean, for me, I think for the most part you've answered our questions. Like I said, what we generally wanted to do was just kind of give a good idea for anybody kind of looking for apartments and or homes, especially during this time. I know with COVID going on, everybody's a little bit hesitant to go out, but it seems people are still capitalizing in the long run with, trying to capitalize on these rates and, just getting apartments. Even myself, I'm actually looking for one right now. So I think this was a great episode, and I'm glad that we were able to kind of have you on, educate us, the lesser people that don't understand this world. So, it's good. Definitely appreciate that. Is there, I guess, before we kind of have our closing, is there anything that you want to kind of just add on, or any questions that you may have for us for anything? So,
just want to add on in terms of buying a home. A lot of people think it's a difficult process. It's not really a difficult process. What scares people is the down payment. But there's a lot of programs out there that can assist you with that. Or it's something called a seller's concession too, where the seller can offer a concession and help you with closing costs and stuff like that. So I generally like to tell people, if you have $20,000 in the bank, you could potentially find something. Now, I'm not saying it's going to be something great. It could be a first-time home, at least you're paying equity into the property, and stuff like that. But don't be scared about taking that step into becoming a homeowner because you feel like it's something you can't handle. Let's say things do get a little rocky during the process. You can always put the home back on the market and sell, So there's always options. That's pretty much. And also, I'm thinking, thank you for having me.
Oh, no, of course.
If anybody watching this is looking for a house in the Queens, Long Island, Brooklyn area, or even Manhattan, I can assist with that. Rentals in Manhattan also. It's a little tough in the Queens market to be an agent as a rental agent in Queens. So more so just sales in that market, but Manhattan, rentals, and all that kind of stuff. So yeah, that's pretty much it. And if anybody's looking to get into the real estate field, the advice I will give you would be to stay persistent. It's not an easy field. I know a lot of Instagram gurus and stuff like that. Like they pump it and they make it seem like it's something like you just get into and 1, 2, 3 is like that. It's not like that at all. You have to be very dedicated to the real estate field. So that's pretty much it.
Oh, well, I have 2 questions. A, how can you said to contact you? Where do you work, or how would you like people to contact you so that you could possibly get some business from the listeners here? And also, I think you were on a really good line of thinking of like what general advice would you give, or somebody either looking to invest in real estate or buy a new home. What would be your honest input at this state of time that we're living in right now? You already kind of touched on it, but if you had any other closing points.
So if someone's looking to buy right now, great time to buy because you're gonna get a great interest rate if your credit's above 700. If you have the money to buy, I would say buy now.
What about rent? Does rent go with that as well?
Rents in Manhattan are at an all-time low. Other markets I haven't seen a dip. Brooklyn may be a little bit, but Manhattan, of course, because it's so condensed, the vacant is vacant. Most apartments are vacant. But in Queens, Long Island, I haven't seen anything dip in the rental. And people it's kind of funny because the 2008 crash was because of the housing market. So people thought that this whole financial crash that's going on right now, they'll see homes on the market at a very discounted rate. It's actually the opposite. Homes are selling above asking and all that kind of stuff. So the only perk about what's going on right now is low interest rates. It's a seller's market also right now from what I'm seeing out there. But if you're lucky enough to get into contract on a property, you're going to be saving about 50 to 70 grand on your 30-year fixed term mortgage.
God damn.
Damn.
That's good as money.
That's that nice
That's
talk.
a lot of
That's
money.
that
Yeah,
nice talk.
a lot of money. Yeah.
Wow.
So.
And again, how can somebody find you or try to contact you for some info?
So in Manhattan, I'm actually with Manhattan Realty Group. That's the firm I've been working at, and I actually in Long Island, Queens, for the home buying and the sales process. I'm with Keller Williams. Yeah, and I'm also in the process of starting my own thing, but we'll talk about that later in life.
Great.
Yeah.
Yeah.
And your full name, because I think you only introduced yourself as Eddie earlier.
Yeah, so my full name, I'm Nigerian descent. My full name is Osemedi Igadiba, but I go by Eddie. Most people call me Eddie and stuff like that. And yeah, that's pretty much it.
All right.
Yeah. Now, don't worry. When this episode drops, we'll have the information that's needed for those that want to contact you. I know a few people will. I'm sure I know the people you know is the people we know, so to speak. So I'm sure reach out. So.
Albany,
yeah.
Okay.
We went to
Everybody.
I remember I seen Charles at Albany. I haven't.
Yeah, he was after us, so yeah. That's
okay.
why
I was only there for 2 years. I was there from 2013 to I graduated in 2015. So I probably didn't catch you, but I mean, great experience socially,
Yes, I agree. Yeah, but okay. Ramy, anything else that you have?
No, I think this was super informative. I was really excited to have Eddie as a guest, as you call him, the professional, with us here today. I learned so much, and I almost feel ready to. I'm gonna go check my bank account, see if I got 20K in there, and maybe I'll go looking for a little slice of property somewhere out there now. But no, seriously, this was very informative. You told us some of the big red flags to look out for, some opportunities to look out for, and I feel really well prepared now than I was an hour ago. So I hope all our listeners out there take some of this great advice, potentially reach out to Eddie in the future. And like you said, don't be afraid. It's not as hard as people make it out to be, but it's also not as easy as some people make it seem either. So if you give it the time and effort, there's plenty of opportunity to be had in real estate. And this man right here, Eddie, has proven that. That wasn't his first field out of college. He read, he studied, and now he's, building himself up in the real estate field. So there's plenty of opportunity to be had there. Thank you for listening. I'm complete.
Thank you.
Thank you so much, Eddie. Definitely, we learned so much. We for those listening, again, I would definitely recommend reaching out to him. Reach out to us if you want us to reach out to him. I know definitely you're open to just giving more game and definitely getting some people in some homes. So I appreciate 100%. That a lot. All right, man. All right, take care, everybody. Thank you.
Thanks for listening.
One more thing, if you guys don't mind.
Please.
Thank you for having me, number one. Number two, also, if you guys are looking for an agent to assist you in your process, you always want an agent that's forward thinking. That's, because real estate's it's a forever changing field. So something that may be true yesterday may not be the same today. So you want an agent that's always on the market, that actually likes the field of real estate and not just doing it for a paycheck. Because when you do it because you like it and it's something that you enjoy, it's a totally different element of excitement you bring to the deal, to your client, to his family, to her family. It's just totally different. So when choosing an agent, I would say look for those qualities. Somebody who's forward thinking and likes what they do.
And adaptable.
100%.
Oh, so you talking about yourself? That makes sense.
No, look at this. We were about to wrap up. This man was like, "Wait, I got more nuggets to drop."
You got more, exactly.
Yeah, but I'm done now, though, man. I appreciate you guys for having me, man.
Thank you so much. I appreciate it. All right, thanks.
All right, take care.
All right, you too. Man.
Thank you, Eddie.
All right, thanks. All right.